Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at brevant.com/wins.
And welcome to Markets Now. I'm Michelle Rook with Brad Kooima of Kooima Varilek. Well, we're seeing a little bit of an easing in the grain market this morning after a pretty good close on Friday. Livestock futures, kind of some mixed trade. Cattle, Brad trying to hold on to some gains here this morning after the New World screwworm rumor tanked the market on Friday. Can we recover from that, do you think?
Michelle, thanks for having me on. So I was trying to take the day off Friday, driving to Des Moines.
The market knew that.
Yeah, invariably. It seems like something weird happens while I'm gone. So I have great empathy for the general customer out there that's going like, what's going on? So switch drivers, have my wife drive. I'm calling around trying to, react. And then finally, a few minutes into it, it's like, oh, there's a rumor that there's a screwworm in the United States. Which it wasn't true. But then as you dig into the story even more, it gets even more mind numbing, at least to me. Commentary from an ag commissioner in Texas that actually had made his comments on Thursday already and somehow became a market factor on Friday. Suggesting that it was inevitable that we were going to get it here. By the way, a little side note on this inevitability of having something happen. Okay. What is it? We talked for 5 years about it. It's not a matter of whether, it's a matter of when we're going to get African swine fever. Now, I'm not trying to jinx anything here, but that's been years. And so far, we've got biosecurity. This isn't Nicaragua. There's 3 products that are approved that take care of screwworm. Okay. I mean, I clearly, I've been asked this and I've asked myself this, why is this bearish if we get one, but there's no sense fighting the market. I mean, the market certainly thinks it's going to be if we get one. That's the market's done that multiple times here. Every time we get a rumor that we get a big sell-off. Now, I don't see either the long-term effect of why that is necessarily so terribly bearish, but the first reaction is going to be that way. So I'm as frustrated as anybody now. So it's Monday. It's Tuesday. We've had a chance to get all that assimilated into the market. The fact that there isn't a screwworm in New Mexico, that the fact that there isn't any more risk in most of our opinion than there would have been a week ago, a month ago, a year ago that we're going to get it here, that we've got more protocol in place now to make sure we don't than we did back then. So you'd say, well, we should get some of that back then, that $4 break. We should get a hunk of that back. And I think that would have been the course of action today. However, you got outside markets that are a big problem today, Michelle.
Yeah. Let's talk about that because the United States says we're going to put a 15% tariff on some of these European countries unless they sell us Greenland. That is where the risk off is coming from, right?
100%. I think, that's one very positive trade deal that we did get made with the EU. And I would say that people are thinking, well, is that all in danger now with this posturing? And on top of that, not just that specific posturing with Europe, but I think that general geopolitical issue here that is Greenland. And if indeed President Trump does follow through and do what he says he might, he's going to, does that embolden China to do something with Taiwan, something that they've not made a secret of, that's what they want. They want Taiwan. And you don't want to think about the trigger of tariff, trade sanctions, that would happen if something like that would happen, So, I mean, now that's a very, very worst case scenario view of it. But unfortunately, that's how futures market have a tendency to work, So we're sitting here going like, why is the gold and silver so strong? I guess that's part of the story, right? I mean, that's where the flight to quality, where people are doing, I don't know where to put my money, so I'm going there. Look at what the stock market's doing today. It's in the tank, So none of that instills any confidence in the long speculator, and that's a problem.
Yeah. And I'm sorry, I need to correct myself. I said 15%. It was a 10% tariff starting on February 1, unless they sell Greenland to us. Let's go back to, okay, so we've got risk off, so that's going to limit the futures. Let's talk about cash trade. Steady last week. We're going to need a higher cash trade week this week to keep this momentum in the futures going, though. That's going to be important.
Yes, I think I'm hoping glass half full guy here. the supply has not changed. We're still going to have very, very tight supply. I'm hoping that we can do what we've done before here with this market uncertainty, and that is stabilize the cash, don't have enough cattle to go around, force the packer to come to our to us and win that battle again. That's what I expect will happen. And I think it'll probably happen this week. I was actually a little encouraged with the way we got to steady on Friday. I know I was bid 228, 9, 230. We ended up selling cattle at 232, which, beginning of the week, I thought we'd get 235. I was wrong because of all the other stuff that went on. I think we would have had a real shot at it Friday had it not been for the meltdown the futures market had. But to be able to trade steady through all of that with what the basis did, I thought was encouraging. The South traded at 233 to 34. Appears to be manageable showless. Killing for 5 days. Boxes are starting to firm back up. I don't know. Let's see if the cash can't stabilize the thing and maybe lead the market from front to back here, back a little bit.
Okay, box beef, though, has been moving higher here with some of these packer kill cuts, yet the week-to-date slaughter last week was actually over the previous week. I'm a little confused.
I agree. The week before, there seemed to be widespread 32 hours. There was a little bit less of it last week, though there was certainly some. One, I know major had a cooler clean out, which slowed it up a little bit. But yeah, we still are getting some cattle dead. Weights are, while they're lower than they were and probably trending lower, still much bigger than a year ago and much bigger than average. But that's by design too, right? I mean, the packer wants some biggies, trying to get some extra tonnage. The grade is still really high, which would tell you that you're seeing a lot of long days on feed. So the overall supply of cattle, though, is still what's tight, even though we might have a few bigger ones around. So I guess I'd like to still think that you're moving into the tightest supply of this whole cycle, and we'll see what that tight supply does. That ought to help us out here a little bit.
Will the cattle on feed report on Friday help confirm again those tighter supplies?
Tighter supplies led by very, very low placements because of the South. I guess I think the report will have a tendency to reinforce and remind us, okay, this stuff is still tight. We're moving into, and there's nothing that can happen at the border that'll change that, not in the short term.
Yeah. And do you think cash will wait to trade until after the cattle on feed?
I hope it does, because that would tell me that the feedlot's got a little bit of courage and resolve that they're going to wait. The packer's going to try anything. I hope I can get some bad news to make it that they're going to hope to find some reason to buy them lower. So hopefully let's win the standoff again here late Friday and see if we don't get a better cash trade.
Gotcha. All right. The hog market, meanwhile, had a higher weekly close last week. We're up into contract highs in April on back. What is going on? Why is this market moving so much higher here? Is this all fund related, or is this disease?
Yes, all of the above that you said there, I think. And then let's throw in, there might even been a little bit of the dreaded hog cattle spread thing going on Friday. There always seems to be some of that when you get a really, really blistering day or a really volatile day on the cattle. It seems like it's usually. So there's part of that. But you've had big fund buying, a monster of a chart looking, great chart pattern here on the hogs. The short-term fundamentals are not great. Weights are plenty high compared to a year ago. Cash just seems to be, I say cash is a little bit sluggish, and then I go sluggish, like $10 higher. You remember that? That was
I think that was on Thursday. The negotiated price popped $10.
Yeah, there's price discovery for you. Awesome. So I do believe and Joe would be better served here. His feeling, and I would agree with him, that there still is a very real issue here with something we've heard over and over in the hog industry. When you have this many hogs in one confined space like this, you're subject to these kind of problems with disease, and we seem to be having another one now. So as the supply of these feeder pigs has tightened back up again because of that, it looks like we maybe have, from a supply side standpoint, a pretty good looking issue here for summertime. I would be a little careful here in the next, 60 days or so, whether or not that's going to show up just yet. But there does seem to be some longer term hope that because of supply. Now, I would say that there's maybe a demand story here too, a little bit.
Okay.
Because I think, pork has got itself priced into consumption maybe a little better than beef has in some sectors, especially if this economy tightens down a little bit. So if you're price point shopping, I think that the pork has gotten itself in a little more attractive position.
Yeah. Grain's a little weaker. Is that all about this risk off with the EU that we just talked about earlier?
Struggling with the grains to come up with something to give the customer some hope here. Big supply. The last report was a problem. Non-threatening weather in South America, getting close to harvest. In some cases, started already a little bit. Now this whole chatter with the tariffing and all this other stuff too is not helpful. The inability of the corn to move very far off if it slows has been disappointing. I mean, that was a steep break, and we can't even hardly get a nickel away from it here. I was hoping maybe we could get halfway back, get back, 10 cents or something like that here on the corn. I wished I had something more optimistic than that. I'm afraid this is where we're stuck for now, until we can, roll ahead here a couple of months, and then maybe we can put a little bit of weather risk or something like that into the marketplace. But for now, I'm afraid we're stuck with small rallies, corrections.
Yeah, no doubt. All right, thanks so much. That is Brad Kooima with Kooima Varilek and Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.